Joining us here at Post 9 is Blackstone Real Estate Global Co-Head Nadeem Meghji. It's great to have you back. Thanks for coming in. We should point out not all real estate's the same, but data centers, are they the most interesting silo at the moment?
Yeah, well, thanks for having me on, Carl. It's interesting. When we look at our global business today, not just within real estate, but across the entire firm, we see data centers as the most exciting asset class. You know, through BREIT, as well as some other vehicles, today we own a business, QTS Data Centers, which is the fastest growing data center business in the world. And if you look across our firm, today we have $50 billion of data centers that we own or are building, another $50 billion pipeline behind that. What's driving that is AI. This revolution is driving demand like we've never seen. And what that's translated to is an 11-fold increase in demand for data centers in the U.S. over only the last 5 years. We think we're still in the early stages of this because, as you said, the big technology companies are telling us that they're going to spend $1 trillion on their digital infrastructure over the next 5 years. A lot of that's going to go into data centers.
And geographic dispersion, Virginia gets talked about a lot. Wisconsin got talked about a lot a couple of weeks ago. Are other states in the mix?
Yeah, so Northern Virginia has historically been the single most important data center market in the world. But what we're seeing is, given the absolute need for data center capacity, given the importance of having access to affordable and plentiful power, there are a bunch of other markets that are becoming much more relevant to the technology companies. Our job is to have dots on the map all around the country, and frankly, it's a global thing for us so that we can serve their needs when they need capacity immediately.
You mentioned BREIT, and I am curious what you're seeing there because everyone's always trying to follow the flows. And if there are outflows after, a few years ago, you had to restrict them because there was so much worry about the wall of maturities. Does the data center tailwind help offset that?
It indeed does.
Yeah.
You know, we're really proud of what we've built with BREIT over the last 7.5 years. And fundamentally, it starts with performance. We've produced a 10.5% net annualized return in BREIT since inception. That's twice the listed REITs over that time period. One of the big reasons is because of what we bought. And you just said it. Data centers represent the fastest growing part of BREIT, an important driver of performance. We also bought warehouses, rental housing, including student housing. We're in the Sun Belt. We avoided buying office buildings and malls. Now, in terms of the flows, what I would say is that the semi-liquid structure has worked exactly as designed. We have no plans to change that structure going forward. In fact, what we've seen is a dramatic reduction in redemption requests over the last 18 months. We've paid out 100% over the last 3 months. We just think we're incredibly well positioned, but a lot of the questions about BREIT emanate from this premise that all real estate must perform the same. We've shown over many decades that that's not true.
But rates are rising again, so we wonder where the pain is going to be.
So there is a real challenge out there today for commercial real estate, and that is, as you said, higher base rates as well as headwinds in the office space. The reality on the ground is we believe a lot of that bad news is priced into asset values, that values are bottoming. When we think about the cost of capital, yes, base rates are elevated, but spreads have come down. So the cost of borrowing has come down. The availability of debt has increased. We just took an asset to market recently, and we see 3 times as many bidders for individual properties than we saw only 6 months ago because of that cost of capital coming back down. The other thing I would just mention is new construction activity, which is down 40 to 75% in our major sectors, another positive tailwind.